There's also thinking that whatever happens in Venezuela is going to take a long time. So even if there is the belief that oil companies will go in and increase production, that in and of itself will take a while, guys. We see the stocks, though, trade higher in the short term. So what do you do?
I agree with that. Happy New Year.
Happy New Year to you.
Good to see you. Welcome back.
Have we reached the end of the window where I can actually say
I reached it a while ago.
All right.
But with all that said, and it's great that we have Halima here in real life to sort of break this down. But I'll say this. What you just said is 100% correct. I mean, this is going to take months, if not years, to sort of reconcile itself. But the market's going to sort of buy first and ask questions later. And to me, this was sort of a piece to a puzzle to get people off the fence in terms of the energy stocks and get them to move in terms of valuation, in terms of balance sheets, and in terms of just being positioned the right way. And we've been talking about that for a while. In Karen's acronym last year, obviously, energy was a big part. And, you know, she may have missed it by a week, but this is still, to me, in play. And Carter can speak to this. The bearish to bullish reversals in ETFs and individual stocks are at pretty interesting levels across a swath of names.
Yeah, so just to the acronym for a moment, had I been in the present tense at CARB instead of past tense carbed, it would have been much better off. Anyway, to the energy, the E, the OIH, that's why it did relatively better, much better today than the underlying. Like, who knows about the underlying commodity, so many other things, but to have a potential for gigantic oilfield services, that's obviously why, you know, we had such a huge day. But if you go back a couple of years, really, this has been a very mediocre trade.
Yeah, I'll just mention, you know, from a sentiment standpoint, we've seen lots of shifts over the last, I would say, month or so. We saw a lot of dispersion in some of the kind of, you know, really popular trades. And to come in here, and we could all agree that energy was not particularly popular despite your CARB, you know, it seems like everyone's on the same side of the boat here. You know what I mean? And you know, Mel, you just made the point. It's going to take a while. And, you know, Eamon just said that some of these large, you know, integrateds and stuff are a little cautious. They have reason to be if you go back and look at the last 20 years, because despite what just happened, it's going to remain a volatile situation for a while. So to me, I just think it's a hard one just to pile into. But I mean, to Guy's point, he's been looking for something that has nothing to do with just happened over the last month. And all of those fundamental reasons might come true, but this uncertainty might kind of add a different layer to the idea of this is going to be a sector that's going to just kind of pick up, I don't know, a little bit of the steam that we saw in the broad market last year, despite the underperformance.
How are the charts positioned? We saw some very, very big gains in today's session for some.
Yeah, I mean, a couple of things. We know that it's still a very small sector overall, less than 3%. But the key is that the beta trade, which is to say drillers and oil service stocks, they've been outperforming since August. So in fact, the OIH and stocks that are in that category are ahead of the S&P. It's the big integrators that have held it back, but those are showing life as well. I think it's a circumstance as follows. You have very little downside risk to be overweight this going into the year. So you either waste time yet again, but I don't think lower is in the cards. So it's either sideways and you have a dud in that sense as opportunity cost, or you actually have something that really does start to outperform for the first time. Now, remember, it's the ultimate. Think about it, the number one performing sector off the COVID low, energy, of course, because what? It was the worst performing sector going into it. There wasn't a single car or plane moving. So a lot of beta, a lot of cyclicality, but within that, it's definitely drillers.
Yeah. Guy, there is also the geopolitical aspect to this in terms of what Venezuela produces, who buys it, who else produces it in terms of heavy crude. Russia produces heavy crude. China's the number one buyer of Venezuelan output. And so if you sort of play the chess game in terms of where the administration wants to exact some pain, I mean, if we're controlling Venezuelan assets and we say, hey, China, we're not going to sell to you.
Yeah.
There are a lot of different levers to consider here geopolitically.
Which, and through the lens of that question, none of them, I think, are particularly bullish. And so, to your point, Chinese are watching this and saying, okay, you know, you've made your foray into Venezuela. We could use the same type of rationale and say, you know what, we view Taiwan in the same way, and who's going to stop us? Russia could say the same thing about, obviously, Ukraine they probably have, but they could move it over to Poland, perhaps. I mean, there are a lot of chess pieces yet to be played, and none of them, I think, are particularly market-friendly. But in terms of energy, you just mentioned, and again, Halima's walking on, I think at its peak, Venezuela was producing 3 million barrels a day. That was probably a third of that now. You know, if you can just get the infrastructure in there with all these U.S. companies and all these service names that Karen talked about, you get it back to maybe even half or two-thirds of what you're looking at, and it's significant for these oil companies.